Good morning to everyone. This is Stavros with another daily insights from Orbex head offices in Cyprus. Today we are starting the week with a bit of improved risk sentiment as Mr. Trump decided to postpone the imposition of additional tariffs to Chinese imports in the US. Without much on the calendar for the day, we are most likely going to see start of the week flows kicking in and technical levels weighing in. My pick for the day is the S&P 500, but before we go into that, I want to talk a little bit about stocks. Stocks have been on an incredible rally this year so far, soaring nearly 15% on optimism that the US-China trade war ends on a positive note. And also, of course, after Fed's shift to move to a more dovish policy path. As we speak, headline news coming out after a weekend of talks say that US President Trump said will extend the March 1 deadline and will not add more tariffs to Chinese imports to the US. Of course, that helps the stock markets as it supports businesses in the US. Now, S&P 500 opened with an upside gap this morning, okay, but lost momentum and lost its gains and currently trades below the 28,000 mark, somewhat mixed. Despite the trade optimism, technicals tell me a different story that may be indeed optimistic in the near future, but not that bright in the short term. Now, on the daily chart, following a corrective wave, S&P moved down to the 23,000 barrier, 2300 barrier, where a two-year low was reached. From there, prices rallied up to 2,800 in a motive five-way move that could soon see an end as the 161 extension adds bearish pressures over here. Now, the 2,800 barrier is a psychological resistance, okay, and also a rejection level that bulls attempted to break 3 more times in the last quarter 4 in 2018, with no luck. Will this time be different? Well, maybe not very soon. A correction wave could be expected now, where the index moves down to the 50 or the 62 Fibonacci retracement of the full impulse wave down to the 2500, 2550 area. That is supported, of course, by a bearish divergence on the MACD histogram and also by an overbought RSI. Now, down on the 4-hour chart, on the 1-hour chart, excuse me, we see an expanding triangle pattern that could have also seen the end of the last upside move over here, okay, to the 2,800 barrier. Now, a break above this level could take the index a tad higher for a false break, where the last wave overextends, whereas breaking below the 2780 handle could be a corrective trigger to fresh lows. Now, on this chart as well, both MACD indicator, its histogram particularly, and the RSI indicator also show a bearish bias on this chart as well. Now, moving down on a closer view on the 15-minute chart, we can notice that the last 5-wave up move, okay, with a corrective sort of bias. And from here, we could expect a sideways market, okay, or a breakout to the downside. Now, the Bollinger Bands also indicate that a breakout is imminent and will probably come sometime soon, given the contraction between the two bands. The RSI and the MACD are again showing bearish signs on this time frame as well, which supports the downside scenario. And from here, we could be looking prices to move lower down to the 27.95 or even down to the 80, where further clues are going to be provided. I would keep a close eye to the S&P 500 as the short-term price action is going to give us more signs of future price. Thank you for watching our daily video, and I wish you have a great week ahead. Feel free to subscribe to our channel to stay updated about the markets, and don't forget to visit our blog where we cover the latest news, publish trading ideas, and provide all the necessary tools to serve you responsibly.